Hello everyone and welcome to Momentum channel. My name is Mo, and in this video I'm going to share with you three of the best exchange traded funds that in my opinion any Canadian investor should add to their stock investment portfolio. These three ETFs do pay a decent dividend. What's more, they also have very low management expense ratio. And the best part, all of these exchange traded funds are available to be traded through major brokerage accounts, including Questrade as well as Wealthsimple Trade. For those of you who might not know, an ETF is a basket of securities combined into one fund and traded on a stock exchange similar to stocks. ETFs can hold stocks, bonds, commodities, precious metals, currencies, and other assets within them. The first ETF for us to take a look at is ticker symbol ZCN or BMO Bank of Montreal S&P TSX Capped Composite Index ETF. As the name suggests, the BMO S&P TSX Capped Composite Index has been designed to replicate, to the extent possible, the performance of the S&P Toronto Stock Exchange Capped Composite Index, net of the expenses. This ETF includes over 200 of the top-ranked Canadian stocks, which represent approximately 95% of the Canadian equity market. You'd also notice that the annualized distribution yield for ZCN is currently sitting at 3.25%, which is a very decent amount in terms of an expected dividend, and that is paid on a quarterly basis. What's more, ZCN has a very low management expense ratio of only 0.06%. ZCN has a medium level of risk. Now, if you look at the holdings within ZCN, you notice that majority of the holdings here are actually stocks, which is why it is one of the more growth potential kind of ETFs here we're looking at. There are a total of 224 holdings within this ETF. The highest one on the list in terms of the percentage is Shopify, which has 7% weightage, followed by Royal Bank of Canada, Toronto Dominion Bank, Canadian National Railway, and Enbridge. If you're interested, you could just access this fund on BMO website and take a look at the entire holdings by downloading as an Excel file or just loading additional holdings list here on this table. Now let us take a close look at the performance of ZCN. You'll notice that the annualized return are shown here for us. So for 1 year, annual return is 3.62%. 2-year annualized return of 9.14%, 3-year annualized return of 6.15%, 5-year annualized return of 9.51%, and 10-year annualized return of 5.44%. And the annualized return since inception has also been an incredible 6.87% or close to 7%, which is just very decent return for exchange traded funds. A lot less volatility as opposed to picking stocks, and you could hold on to this and perhaps even continue to dollar cost average by adding more and more shares of this ETF to your portfolio. So the second exchange traded funds that I wanted to bring to your attention is called XUU or iShares Core S&P US Total Market Index. It is offered by BlackRock. And what is the advantage of this XUU is the fact that this way, through owning this ETF, you're actually getting exposure to the entire US stock market. It offers that with a lot lower cost, and also it's designed to be a long-term core holding for many investors. It seeks to kind of mimic the performance of the S&P 500 Total Market Index, net of expenses. The beauty of these ETFs that I'm introducing is that all of them are actually traded in Canadian dollars. And as you know, if you try to buy any of these ETFs in Canadian dollars through Wealthsimple Trade or Questrade, you're not going to pay any fee for buying those. When it comes to selling ETFs, for Questrade, there's a charge, but for Wealthsimple Trade, there's no charge even for selling Canadian ETFs. For me personally, I prefer Wealthsimple Trade when it comes to buying or selling Canadian ETFs or stocks. As for the return for XUU, you'd see that the annualized return 1 year is 14.48%, which is incredible. Annualized 3-year return of 12.79%, annualized 5-year return of 13.67%, and annualized return since inception is 12%. In other words, when we say annualized, it's indicating that within the past time period, every year on average, that has been the return per year. So it's quite remarkable return for this ETF XUU that we talked about. In terms of assets under management, we are looking at close to $1.6 billion. This ETF also pays a dividend or distribution of 1.70%, and it's paid on a quarterly basis. It also offers a DRIP or dividend reinvestment plan if someone is interested, so that any dividend is automatically reinvested as long as they meet the amount to be able to buy one full share of the ETF. Now, if you look at the cost for 𝐻𝐈𝐿, they have a management expense ratio of 0.07, slightly higher than the management expense ratio compared to 𝗖𝐻𝐁𝐘𝐿. It has a medium risk, and if you look at the top holdings, holdings here actually are mainly consist of other ETFs. But essentially, in terms of exposure, you're getting a decent exposure to information technology. Almost 1/4 of the exposure is to IT sector in the US, followed by healthcare and consumer discretionary. But you also notice exposure to other sectors as well. Lastly, the third and final exchange traded fund that I want to bring to your attention is a more riskier option, because it's an all equity ETF. So pretty much 100% of your investments are invested in stocks and not in bonds. As a result, it's a little bit more risky, but long term, especially if you're younger, this could be a very good ETF for investors to consider. And the ticker symbol is VEQT. It's offered by Vanguard. You notice that the net asset under management is a bit smaller than the other two funds, sitting at close to $570 million. The 12 months trailing yield in terms of distribution yield is showing 1.48%. And here the dividend is paid annually, unlike the other ones where the dividend was paid on a quarterly basis. Now, let us take a look at the performance of this exchange traded funds. You notice the 1-year return is showing 10.91%, and the annualized return since inception is also showing 13.31%. In terms of sector rating, the biggest exposure is to financials, followed by technology, consumer discretionary, industrial, and healthcare. So different from the other exchange traded funds that we talked about earlier on. There you have it, folks. My top 3 picks in terms of the exchange traded funds to be invested by Canadian investors. All of these exchange traded funds that I talked about are available in Canadian dollars, and you can access them through Questrade, Wealthsimple Trade, or other major brokerage firms here in Canada. I hope you found this video beneficial and you gained something of value from it. If you did, please be sure to give it a thumbs up and share it with someone who might benefit from the video as well. By the way, if you're new to investing and would like to consider opening an account through Wealthsimple Trade, be sure to use the referral link provided in the description of the video. By using the link, you're actually going to be able to provide and get access to roughly about $25 of cash bonus at this time with Wealthsimple. So I do encourage you to use that and sign up an account with Wealthsimple Trade, which allows you to buy or sell any exchange traded funds or Canadian stocks for free at no cost whatsoever through Wealthsimple Trade. I've been using Wealthsimple Trade for the past 3 years and absolutely love it. Definitely give that a try and let me know what you think. Thank you guys for watching this video. If you haven't done that already, please subscribe to Momentum channel. Here on Momentum, we post weekly videos about stock market investing, finances, and financial freedom. I'm talking about Canadian stocks, US stocks, and different types of investment avenues for you out there. Thank you, and I hope to see you next time.